Greetings, everyone. We're going nationwide over four different time zones. And welcome to our webinar. I'm Jim Obold, CEO of Servant Solutions, so welcome. And our webinar is titled Making the Most of Your Housing Allowance. This is always our most popular one, and it's reflected in our webinar participants today. We have a record number of participants, so thank you for joining us. We've already received several questions, and I just want you to know that we will be able to answer all of them either directly through the email that you sent or through the contents of this webinar or even afterwards if we have some follow-up. So we want to make sure that we reach our goal of today. This is such a wide and expansive topic that we're not going to be able to cover everything probably that you need in a half hour, but we want to be able to resource you and make sure you know where to find it, either through us or other means, and we'll be showing you some of those resources today. I want to send a special greeting to welcome our new friends at the Wesleyan Pension Fund as we begin to be your powered by solution to serve you and provide you value. So welcome to our webinar today. I'd like to introduce our panelists today. First of all, Dr. Jerry Fox. He's our Director of Financial Planning. He's a certified financial planner. And then Nate Bowers. He's our Director of Financial Education. He's also a former executive pastor. David Boots, Reverend David Boots. He's our Director of Member Relations out in the West Coast, and he was an executive pastor for 36 years. I know he looks young, but 36 years. And then Ellen Daniels, our Director of Engagement. She always does so well with our Q&A, and she'll be providing that service at the end. So let's just go to the Lord with prayer, and as we dive in today. Lord, we thank you for this time and the interest in this topic. We know it's important to many on many different levels, legally, financially, and so forth. And we just pray that we recognize your presence with us, bring us clarity as we talk about this subject today. We love you, Lord, in Jesus' name. Amen.
Amen.
So as we dive in, let's first take a look at what the housing allowance is and who is eligible. So David, would you kick us off, sir?
Sure. Thanks, Jim. So just not to make any assumptions, housing allowance is a portion of your paid compensation as a minister that is identified and set apart separately when it comes to taxation purposes. So we determine the amount of dollars that it would actually take to provide for housing. Once that amount is determined, it is noted, and then as we are paid both taxable income as far as federal tax complications and non-taxable federal tax income. So that's what housing allowance is in a sense. It's to shelter some of our income from federal taxes. Who's eligible? The IRS puts it this way: those who are ordained, licensed, or commissioned, meaning they're recognized by the church or the denominational governing body, that is your ministerial status. And also, the IRS says, and in the exercise of ministry. And they go further to explain that, meaning you're serving as leadership in religious services, you're performing sacerdotal functions, administering the sacraments, things like that. And then also, it identifies those they're providing service in the control, conduct, and maintenance is how they word it, of a religious organization. So even those pastors that are working as administrative or executive, you may not always be up front on a Sunday morning, so to speak, but those are the ones that are recognized as eligible. And if you are ordained, licensed, or commissioned, depending on how your governing body handles that kind of thing. And then how is it determined, Jim? You brought that up. It's determined to be the lesser of three amounts. The first amount, it's important to mention, and that is the amount that's actually stated, documented, and how you get compensated. So if you say that it's $12,000 for the coming year and you're paid that, that's the amount you can use. Even if you have more expenses down the road, even if you have more receipts, it's the lowest of these three. One is the designated amount. The second would be the amount you actually used. So if you end up having $25,000 of receipts of expenses you can justify. And if that's the lowest amount, if that's lower than what you designated, if you designated 30,000, you have 25,000 of receipts, that's the amount. The third one would be the fair rental value of your home, including furnishings furnishings, utilities. We're going to dive into that, I think, a little bit later on. We'll talk more about how to determine that. But if the fair rental value of your home furnished, plus utilities and all, is the lowest, then that's the number that can be used. Jody is behind the scenes handling all the details. And I think, Jody, if you have the worksheet, we have an example of a worksheet. We'll try to throw it up on the screen there for you. But we do have things on our website. If you go to servantsolutions.org, you'll find a lot of great materials. But there's a worksheet that we have available, and we'd be glad to even make it available to you. You can just write into us afterwards, and we'll be glad to send it to you. But on the website, servantsolutions.org, there's a tab labeled Learning Center, and under that, Ministers Housing. A lot of information we're hitting today is all provided on our website under that Ministers Housing tab.
All right. Well, thank you, David. And you mentioned something about fair rental value, and I guess fair market rental value, and that determination point. And so, Nate, can you comment on what goes into determining that value?
Sure. Thanks, Jim. And a good question. Fair market rental value, because as David detailed, this is an important figure and an estimation to have because your actual housing costs might exceed the fair market rental value of your home. And the IRS specifies that the least or the lesser of these amounts will actually be your cap for your housing allowance. So every pastor is eligible to take the housing allowance that is eligible should have an estimation of the fair market rental value of their home. And the fair market rental value of your home is kind of exactly what it says. In a fair market where you live, what is the yearly amount of your home, fully furnished, including utilities? So the real question is, how do we come up with this figure? Well, there are several ways to do this. One, you can estimate this yourself. You can go to one of the big real estate websites like Zillow.com or Redfin.com. You can actually plug in your specific address and get an estimate of what the rental value of your home would be. Now, keep in mind, though, this figure doesn't include utilities, electrical, water, gas, trash. You know what these are. Hopefully, you live in your own home, right? And you can know what these amounts are. But we also need to include a calculation to include furnishings. Now, I will say this amount varies widely across the country, depending upon the demand, the market in which you live, but also the quality and the age of the furnishing in your home. But the normal range is somewhere between 10 and 20%. So we recommend going with a 15% add-on for furnishings. Now, I would also suggest printing this off from Zillow, documenting your calculations for both furnishings and utilities, and filing this away with your taxes should you ever be questioned on this number. Now, I will say, while this is an acceptable way to estimate this figure, a better or a recommended course of action is to actually contact a local real estate professional in your area. Now, if you don't know one, ask around your church. I bet 4 or 5 will pop up that you weren't even aware of there. But a real estate agent in your area will be able to give you a much more accurate estimation of the fair market rental value of your furnished home, including utilities. And again, just request that they give you this estimation, maybe on their letterhead, and then file it away again with your taxes. I have personally yet to hear of a pastor being questioned on this amount, but should you ever get audited, I've always ascribed to the Boy Scouts motto of always be prepared. So you'll be thankful to have this documentation should that occur.
Good information, Nate. David, let's pop back to you. You know, we know these 3 areas, but how should housing allowance be documented and how often?
Oh. Yeah, it's very important that the church has something recorded on file. What we suggest and what's normally accepted is that it just gets documented in the official minutes of the board. In my experience, we would always have a November board meeting. We tried to stay away from December because of just the time of the year, busyness and all. But in our November meeting, I would always ask our staff to have to me the amount that you want designated as housing. By the way, I want to insert, this is up to the pastor to determine their housing amount. I don't want to let that go unsaid. Often, pastors think the church designates how much they're going to get paid as housing. No, the church decides how much they're going to compensate you. The pastor decides out of that total compensation, how much is your housing going to be. It's up to you to determine it. It's up to you to justify it. The church is not involved in that part with the IRS. Anyhow, once you decide, that number is submitted. As executive pastor, I would receive all the pastor's numbers. I'd put them on a sheet. It would go before the finance committee of the board. They would review it and sign off on it that it's so noted. And then in the board meeting, the finance committee would say, we receive the 2025 housing allowance designations. They are all approved. We're asking the board to ratify them. Board ratifies that and it goes in the board minutes. And then it's kept in my case, it was kept in my files as executive pastor for any kind of reference in the future.
That's great clarifications, David. One thing we do know is that housing allowance is not considered taxable income in box one of our W-2 forms. Now, some decide to leave that off our W-2, our employers do, and some leave it on. Jerry, what's your thoughts on reporting housing allowance on the W-2?
Absolutely. As you all know, if you've ever filed a tax return or worked someplace, at the end of the year, your employer has to give you a W-2 statement that says, this is what we compensated this person with. Now, it gets a bit more complicated in case of a pastor, as we've talked, because pastors are considered dual status taxpayers. For income taxes, they're considered a regular employee, and your employer has to show that. But for payroll taxes, what we typically think of as Social Security and Medicare, you are a self-employed taxpayer. In fact, the church cannot pay those expenses on your behalf. And so it has to show up differently on your W-2 than it would for most people. Jody, I think we have a W-2 form that we can put up there just to give an example here. If you're a typical pastor, let's say a starting pastor, and being paid in the lower range of compensation, you might show that most of what you received actually qualifies for housing expenses because a bigger portion of your paycheck may go there. So in a case like this, you see that down in box 14, housing allowance, on the W-2, you can designate that out of my total compensation package, in this case, it looked like it would be someone making just over $31,000, that out of that, only 8,600 was taxable compensation to me. I've subtracted out the housing amount. That, though, is recognized down in box 14 because the IRS is going to look at your total compensation, but they need to know you have not had withholding for your income taxes on that full amount, only what appears in box 1. Now, if you're a pastor, you'll see right below that boxes 3 and 5 are Social Security wages and Medicare wages. Those should be blank if you are a pastor, okay? Because the church has not paid those payroll taxes on your behalf. Now, I do want to mention this, that both of those amounts, though, you still have to pay payroll taxes, but it's going to be on that total amount. And you on Form SE as a pastor, self-employment, have to pay those payroll taxes and recognize both of those amounts. And so those will show up there as you do that. Now, it's not uncommon for the person who is doing payroll at a given church to be a volunteer. And some of these things may not be familiar to them. We always highly recommend that you work with a CPA that understands clergy taxes. And we have a list of people that have been recommended by pastors that are members of Servant Solutions, and it's on our website as well. We encourage you to work with someone to make sure that those things are done correctly.
Well, thank you, Jerry. And I'll underscore that if your housing allowance has not been reported on your W-2, that's a best practice. And just encourage your church treasurer to do that. And if they need any help, we're a resource for them to make sure that they can get that done correctly and report that correctly in the future. So speaking of IRS forms, For those of us that aren't retired right now, eventually you'll start, instead of contributing, you'll start your distribution phase. And there's another IRS form called the 1099-R that you'll receive on the behalf of Servant Solutions as we become your paymaster in retirement. Nate, can you explain a little bit about that?
Sure, Jim, I'd be glad to. Dr. Jerry Fox just gave us great information about the tax forms while you're still working. But what about taking your housing allowance in retirement? Well, here's the really good news. Because we, Servant Solutions, are an IRS approved, church sponsored 403(b)(9), the nine's critical plan. If your credentials are up to date and the funds in your Servant Solutions account were earned during time as a minister, then you can have all or a portion of your distributions designated as a minister's housing allowance, essentially reducing or even completely eliminating your tax liability on that portion of your distributions. And unlike during your working years, you don't have to declare that amount to be designated a housing allowance at the first of the year and have your board approve it. In retirement, you actually wait until the year has passed, and then you determine the actual amount of housing allowance expense occurred. Now, this is because the Servant Solutions Board of Trustees has already taken action to approve a blanket resolution for all retired ministers to allow eligible distributions made by a retiree to be used as housing allowance. So at the end of the year, retired ministers who are receiving distributions from their Servant Solutions 403(b)(9) retirement plan, you're going to get a form 1099-R. And Jody, if you could pop that up on the screen, that would be fantastic. Thank you. Perfect. So you'll get this 1099 form that will disclose your total annual withdrawals. And this form you can see in box 2B there, it is checked and it says taxable amount not determined. Now, what this form does is it serves to notify both you, but also your tax preparer and the IRS that some or even all of your box 1 gross distribution amount is eligible to be classified as a housing allowance exemption and can be excluded from your taxable income when you file your taxes. Great news, right? Now, a reminder again that the amount that you exclude as housing allowance, it's either the lesser of your actual housing expenses or the fair market rental value of your home. And if the entire gross distribution is equal to or less than your calculated housing allowance for the past year, then it won't be taxed. Now, any excess distributions above what may qualify as housing allowance is the only portion reported as taxable income. Clear as mud, right? Let's look at this example in specific. Gross distribution from Reverend Wonderful. David, that was probably your nickname back in the day, right?
There you go.
But the gross distribution from Reverend Wonderful here was $11,793. Now, if Pastor Wonderful, if his housing allowance costs for the year were above that amount, let's just say they were $15,000, then on his taxes, he is able to exclude this entire gross distribution and will not be taxed on it. But let's say his housing allowance costs were only $10,000 for the year. Then it would be the difference between those two amounts. So $1,793 would be able to be taxed and the $10,000 would be excluded from that. This is a great benefit in retirement for our pastors.
It is. Yeah.
Nate, you bring up a point that I want to emphasize along with that. On the previous one with the W-2, if what you have designated as housing allowance is above the lesser, as David specified, of my actual expenses, I then have to claim that additional amount that I showed as housing allowance as income in that year. Same thing that you just mentioned with that 1099.
Another comment to that regarding taxes, if you're wondering, I'm going to speak from a one who does my own taxes. Over the years, I've just gotten more and more comfortable with it. How's that done? If you use any current tax software, it will literally walk you through. Once you let the software know what type of employment, it literally will ask you if you were served in religious ministry, are you ordained, all that. And then the next question is simply, how much did you claim as housing allowance? And you put the amount in. Then the next question on my software says, how much did you actually use? And then you put that in. And then immediately, that back to your example, Nate, it will say, oh, there was $1,793. And it actually moves that to the very top of your 1040 form. And it says additional incomes unused housing allowance. So it
Right.
might sound complicated, but typical software and a tax preparer that understands ministers will know to do that. You don't have to figure out how am I going to report that.
Yep.
Yeah, this is all great information, everybody. Thank you for that. And before we take some questions with Ellen, there's one more thing I want to make sure we address, and that is a common practice. We don't know if it's a recommended practice, we'll find out, is that a lot of pastors don't want to take their mortgage into retirement. And so, regarding taking a lump sum distribution to pay off your mortgage, Jerry, as a professional financial planner, what are your thoughts on paying off a mortgage with a lump sum distribution?
None of us like debt, and it feels very good to get a loan paid off. And in almost all of our lives, that makes sense. But for a pastor that has the housing allowance opportunity so that the dollars you are using to pay that debt off, you're not taxed on, it is rarely in their best interest to try and pay that off ahead of time because you're going to lose in several different ways. The first one is that if you take a lump sum out of your retirement account, say, to pay that off, when you take that out of your account to do that, it can be taxable income if, again, your total is above your fair market rental value for the year. So let's say you still owed $50,000 on your house and wanted to take out the money to pay for it, but your fair market rental was only 25,000. I now have to declare that additional 25,000 as income in this year, which could actually bump me up into a higher tax bracket. And I've got to pay additional tax on that. Another way to think about this is that I am taking money that is growing tax-free in my retirement account and bringing it into the taxable realm to pay down a loan. Well, my loan might be only at, a lot of traditional mortgages right now, 5% or even less. And my money in my account this last year earned 15%. Why would I take money that I'm earning 15% out to pay down something that's only costing me 5%?
Mm-hmm.
I'm giving up an awful lot of growth, tax-free growth or tax-deferred growth to do that.
Mm-hmm.
One other element to that, pastors have a tax break that most of us do not. You are paying your housing costs, including mortgage, interest, and property taxes, with non-tax dollars under the housing allowance, but you still had to pay those. If you itemize your deductions on your tax return, those are still tax deductible expenses. And that's less of a case for people as they've raised the standard deduction that fewer of us actually itemize deductions. But if you're in that group that does, you've given up tax breaks in several places to do that. So it's rarely to your advantage. There are some people that if your mortgage is small enough and you just want to be done with it, it might make sense, but not very many.
Great. Thank you, Jerry, for that. And it's kind of the other side of a lump sum distribution. And thanks to each of you for your helpful information today. So I think we're ready for Ellen. I think we have some questions that have come in. I've seen the chat just blow up here. Can you guide us through some of those?
I will give it my best, Jim. We have had lots of questions, folks. So I mentioned in the Q&A, if you do have a question, please enter it in the Q&A section at the bottom rather than the chat session. But I also mentioned we have had so many questions. We want to make sure you know if we don't get your question answered on this webinar, we will be answering each and every question that comes in, and we will send you a link to the webinar as well as a list of those questions. You may not receive that until tomorrow or possibly even Monday, depending on the number we have to answer, but you will get your answers. So let's dive in here a bit. The first question is, can I take housing allowance as a part-time employee? Nate, can you answer that one for us?
Sure. You definitely can take housing allowance as a part-time employee. It basically depends, again, to those questions that David brought up. Are you commissioned, licensed, or ordained by your ministerial governance board? And then are you performing ministerial works? The government does not distinguish between whether it's full-time or part-time. So yes, you can still take a housing allowance even if you are working part-time.
Excellent. I have been told housing allowance expenses include consumables like cleaning supplies, mulch for flower beds, tools, gas for a lawnmower, etc. Also, utilities, internet, and cable. Is this correct? And also, what is not included? David, could you speak to that one?
Yeah, yeah. Right now, I was stuck on the first part of the question. So, what is not included?
Sure.
I'm blank right now. But yes,
Sure.
any of those consumables, anything that is used to maintain or improve your primary residence, and that's true, by the way, even if you live in a church parsonage. The church provides the parsonage, but if you go buy light bulbs, if you have the carpets cleaned, anything that you do that's out of your pocket that you spend. Also, even like personal in back to parsonage, even like insurance on your contents. We would call it renter's insurance because the church insurance may be on the building most likely won't cover contents. So I'm trying to think. I don't know if anybody else wants
David,
to.
let me speak to this. I actually had a question from a pastor a couple weeks back on just this topic. Basically, IRS regulations list a whole lot of things that can be included, but the only thing specifically that they state that can't be included are personal items.
Yeah.
So expenses for groceries or paper products or personal toiletries or clothing. The one thing they do specify is maid service. Maid service cannot be used. So if you bring in a cleaning crew to regularly clean your place, that cannot be included. The other thing they've made specific about is entertainment. So if you have streaming services like Netflix, Hulu, those would not be eligible. And then the last thing I'd add to this is most people will assume that if you have a home equity loan line of credit and you're paying that off, that you can put all of that towards your housing allowance. I would say this, if you've used those home equity loan proceeds for non-housing expenses, that will not qualify. Only the portion used for housing related expenses are eligible.
Thanks for bailing me out there, Nate. Great point. Also, I'll mention cell phone, no. Landline, yes. That's something that hasn't been readdressed yet. So a cell phone is considered something you carry with you. It's personal. It goes with you. A landline is attached to the property, just like your electric wires and your gas line, things like that. Jerry?
Yeah, let me add one more caveat to that. And you brought this up, parsonages. I'm thankful that fewer pastors are dealing with that kind of thing. It seemed like a real blessing. Hey, I didn't have to worry about buying a house and all of that. But there are a couple elements to that. Sometimes there is the assumption that because the church provided the housing, but I pay the utilities or I pay for draperies and those kind that's not included in the housing allowance. That's not true. You still can, any of those kinds of expenses that you are covering can be excluded from your income under the housing allowance. But I also want to get on the dark side of the force. If your church is providing a parsonage, that fair market rental value comes into play again, because the fair market rental value of that housing is income to you by IRS standards. And so you have to have that estimate and include that in your income when you pay your income taxes. So you're better off in many cases, if the church can do that, to rent or buy your own place. And especially if you can buy a place and build equity with that. A lot of churches are selling their parsonages and using the proceeds to help their pastors with that process so that they're building equity as they move toward retirement.
A side thought here. Often the question comes up, if I own my house free and clear, can I still claim housing? Absolutely. That would
Yeah.
be everything but your mortgage payment. You still have insurance, you still have property taxes, HOA dues, you may have all those things.
Right.
So
Yes. And you're always going to have those things. So there's always going to be things you can claim.
like retirement,
Excellent.
even in retirement, if you're debt free, that's correct.
Exactly. Great. Anyone else on that? That was a great question. Okay. Another one. How is the housing allowance a benefit? It reduces federal tax, but then you have to pay SECA, which oftentimes seems like I don't get a refund when I've had to pay that. Can you please clarify? Jim, can you speak to that one?
Sure. One thing that you'll see in our resources is that we recommend that every church offer a SECA allowance to make sure that this situation does not happen. Uh, for uh, just for clarity, some churches don't know what they don't know, and when they're in their pay structure, and they don't understand the dual status of an ordained pastor, that they still are on the hook for all their compensation for SECA taxes. Even though they save on state and local taxes and federal taxes on that money. But what I would encourage is that if that pastor was a regular employee, that church would have to pay 7.65% toward their SECA. So why don't they offer that as a SECA allowance? Because they would have to do that for any other employee. They get off the hook for pastors if they don't provide a SECA allowance. I don't understand why some churches do that. I think it's just because of they don't know. And so, if that's your case, for those that are listening, you can get on our websites and see how that works, and give us a call, and we can work with your treasurer or board to make sure that happens, because that is unfair to each and every ordained pastor that does not have that benefit. Anyone else add to that?
Ellen, I will just add this to it. I hear this all the time. Um, I use the housing allowance, but I still end up having to pay taxes when a lot of my friends are getting refunds, and I feel like I'm missing out somehow. Well, stop and think what a refund is. It means you overpaid tax withholding all year long, and the federal government held your money all year and didn't pay you interest for it. And at the end of the year, because you paid too much in, now I got a refund back.
Mhm.
And so getting a refund shouldn't be our goal. And the key is there are tax benefits if structured well to make sure that you are paying the taxes that you owe at no additional cost to the church, really, as Jim was just talking about. The church is saving money with pastors that they don't have to pay the employer side of the payroll taxes. But if they leave that entirely up to the pastor, that's really not fair to the pastor. And there are ways to do it at no additional cost to the church that benefit both parties well. Our website gives lots of information, and our financial planners are happy to help discuss that with you.
Mhm. Folks, I'm glad Jerry mentioned that. Our website is chock full of great information, but we don't expect you to understand everything about housing allowance just by viewing it. So please know this webinar is really to draw you to us. We're here for you. We want to serve you. So if we haven't gotten your questions answered or it's still fuzzy, know that we're available. We want you to reach out. We have lots more questions. I'm going to throw out a couple more, and then to value your time, we will end the webinar, but please again know we will send every question with an answer. Do we have to pay quarterly tax payments, or can we do extra withholding and pay at tax time? David, will you speak to that one?
Absolutely. You can do either, whatever you prefer to do. For all of my ministry career, I just filled out a W-4 form like everyone else does. And all you do, I'm blank on the line. I think it's 3C or 4C
I
down toward
think
the
it's
bottom.
4C.
It's
Yeah.
4C, and it basically you don't worry about all the stuff of dependence and everything. It just says other withholding amount. And then what I have done, once I establish my annual tax liability, and you just do that year after year, you kind of know what it's going to be. I would just take my total, if my total tax liability was $5,000 and I was going to get 24 pays, I would just take $5,000 divided by 24 pays, and I would say, please withhold X dollars per pay from my pay. That is done then just like all other employees of the church. It's withheld and it's sent into the IRS. When the IRS receives it, they see what my total tax liability is at tax time. And I owe taxes on my SECA, which is the self-employment tax Jerry talked about. And so it's applied toward that. You don't say this is for minister's tax or SECA or FICA. Just withhold an additional amount from my paycheck. And that's the easiest way, in my opinion.
Yeah.
Next question. Is there a minimum age that I must start taking housing allowance benefits? And I'll add to that, we had another question. If I stop taking housing allowance at some point and start again, is that an issue?
Anybody, Nate?
David?
I'll take. Sure.
Jerry?
There's no minimum age as long as you meet the requirements we talked about at the onset. And as far as starting and stopping, there would be there's no problem with it. I'm not sure why it would stop. If you stopped employment, If you temporarily were secularly employed or whatever, of course you wouldn't, but then you go back into church employee, absolutely, as long as you're qualified.
Just one
And
thing.
now let me,
Yeah,
sorry,
go
Gary.
ahead.
Yeah,
I
if I
was
can
just going to
add on to
add,
that.
I was just going to add on to that. In retirement, per our plan specification, and also in the eyes of the IRS, you would need to be at least 59 and a half before you can begin taking distributions. And then as to a maximum age, I will just say when you reach 73, required minimum distributions per the government, because they're not, unfortunately, all the tax benefits they're getting, they want to recoup some of these. So they're going to require you to start drawing those out at age 73.
Yeah, and I'm assuming that this question was, if you're with the same employer, can I, stop for a little bit and get back on? I just know the IRS frowns upon that. You cannot have, if it's helpful to be treated as a pastor in one season and it's not, let's say during when my kids are going to college and I need my, I need my tax income or whatever, my income to look different. You can't manipulate your pay like that, or even have it direct your
Right.
board to do that. Uh, what I've seen is that they like once you become a pastor, you're always treated like a pastor when it comes to compensation, taxes, and benefits, and you can't vacillate between the two based on what benefits you.
Great. Thank you, Jim. One last question. Jerry, how about this one for you? How does all this work for a retired minister? This is one of my favorite questions since we're from Servant Solutions. How does this work for a retired minister and the only source of income is Social Security and withdrawals from my Servant Solutions account? So how does housing affect them? Housing allowance.
Sure. Well, if your Social Security benefits are enough to help you cover non-housing related expenses, Social Security benefits are going to be taxable income. Now, there's a proposal that change, but currently what you receive, but they are taxed at a lower rate than typical income. And so that's a benefit. But anything that you are using for housing, that might be a time when you want to begin taking enough distributions out of your retirement account to meet those housing expenses and doing that with tax-free dollars. Now, Nate mentioned at age 73, the IRS is saying you can't leave your money growing tax-free in that account forever. We want you to begin taking some distributions. But if those are used for housing as a clergy person, they're still not taxed.
Right.
You've met that minimum required distribution and still not taxed. The better answer to that, meet with one of our financial planners. We'll look at your whole picture and say, let's make sure you're making the most of the resources you have while minimizing taxes in doing so. And we can help you with that.
And the beautiful part about Servant Solutions is they can get that housing allowance tax benefit through us, even though they're no longer working for a church. So
That's right.
403B9 church, that's the important part about it. So
Ellen,
folks,
Ellen,
yes, David?
I'm sorry, I gotta catch this because it's so important.
Yes.
Something that you just mentioned triggered this. Very often, we may be approached by a wonderful, well-meaning person in our churches
Yes.
that say, if you just want to consolidate all your retirement over to this with who that I manage, just know this. Once you roll your money out of your Servant Solutions 403b9 account, you cannot receive it as housing allowance, tax-free, tax-sheltered housing allowance. Just keep that in mind. Please check with us. We're not trying to keep your money. We're trying to protect you and your housing allowance. So,
That's right.
Ellen, I just wanted to interject that. Thank you.
Appreciate that so much. And again, we are here to help you. It's our honor to serve you who are serving the kingdom. We often will get on calls with boards to help them to understand some of these issues. So please know we are here. Our website, which is a wonderful resource, is available to you, but feel free to call our 800 number and reach out to any of us. Thank you again so much for your time today. We appreciate it and we appreciate you. Have a blessed day.
Thank you to all our Wesleyan Pension Fund folks, and know that you can go to the Wesleyan Pension Fund website and call the normal number to get information on this topic as well. So thank you for joining us, and please join us for our future offerings. Bless you.
Thanks, everybody. It's been great.
Thanks. God bless you.